Time now to talk about your investments and the economy. I'm joined by Chad Carlson, Vice President and Certified Financial Planner with Delta Trust Investments. Chad, welcome. Welcome back.
Thanks, Roby. Good to be here.
The last time that we talked around the beginning of the summer, we were talking about some new investor disclosure statements that are going to start coming out, some new information. Refresh my memory on this subject.
Well, the big impact is going to be for those that are participants in 401k plans or statements that they're going to get in early October, going to have an extra page in them. It's going to list all the investments in their plan, and it's going to provide more information about the expenses that they're paying.
And tell me what will be some of those expenses that will be outlined there. How will people kind of read it, interpret it? I suspect that they're going to probably call you and go, what does all this mean?
They're going to be reported a little bit differently depending on who your 401k provider is, but they're basically going to tell you what cost you're paying for the actual investments in the investments in the fund, for the investment management cost. So if you have a Vanguard 500 fund, they're going to tell you what Vanguard's charging for to manage the fund itself. And then there's going to be a separate line in that chart that's going to tell you what fees you might be paying for other parts of the plan. So for administration or part of the operations of the plan that is being charged to you as a participant.
What's the point of all that if you are the consumer, if you are the person reading this statement? What are you supposed to be taking away from that?
Well, it might help you to make a decision about choosing one fund versus the other. You might see that if there's two funds in a particular category, one might have a lower investment cost, and that might be of advantage to you because the lower the cost you pay, could result in better performance for you and more money in your account.
But not necessarily, though.
But not necessarily.
Right.
Not necessarily.
And this will start hitting in October is where we may see this a little bit more widespread, or we've seen some of this already?
We've already seen it. Most of the major 401k providers have already been reporting this. They've been doing this for a while. All the information's already up on their websites, so if you like to view your account online, you go online, log in, and you'll already see it there. But the statements that will go out in October will be the end of the quarter, and that's where most people will notice it for the first time.
Let's shift gears and talk about a big move by the Federal Reserve this past week. They have initiated QE3. It's just two little letters, one little number, but it's probably a really, really, really big deal. Tell me what it is, what the feds are going to be doing.
Well, they're going to be spending about $40 billion a month, and so that's a lot of money. When you quit counting decimals and when you quit counting commas, that's a big number. And what they're trying to do is keep interest rates low. I mean, long and short. They call it, they want to have an accommodating monetary policy. It really means keeping interest rates low.
What was a little bit different? We've been down this road two other times before. There's been QE and then QE2, now we're QE3. What's a little bit different about the statement that the Fed's made this week?
Well, what I read to be the biggest difference is that they're forecasting that not only is our objective to keep interest rates low for a while, but they've also said even after the recovery has taken place, the objective here is to help with housing and put people back to work. Now, we don't know if that's going to work or not, but they're telling us that even as we start seeing those improvements, they're indicating that they're going to keep interest rates low for a period past that.
So let's talk about who this helps, who this hurts. This helps businesses that may want to borrow money. This helps probably bigger businesses that need cheap money. Who does it hurt?
Well, that's going to be the big question. I teach my 4-year-old that her actions have consequences, and we don't really know what all the consequences of this are going to be. There's going to be long-lasting ramifications. We've already have a debt crisis in the country, and that's probably a conversation for another show. But it's going to be interesting to see what happens.
But if you're a person that relies on interest rates for your investment income, and they are going to keep them low over a long period of time, this is something that's going to be detrimental to your investment strategy.
Investors that are looking for investments in fixed income are struggling right now. Retirees, those that want to put money in, have traditionally put money in CDs or have put money in bonds. They're really struggling to find fixed income investments that pay a rate of return that will give them a real return on their money, and it's a real challenge for investors in that category.
All right, we'll have you back to talk about this in more detail as it unfolds a little bit more. He's Chad Carlson with Delta Trust Investments. Thanks for being with us.
Thanks.